All right, everybody, welcome back to another episode of Cash Flow Positive. This is Kenny Bedwell here, and I have a special guest from Michigan, all the way from Michigan. I feel like Matt doing the like Chicago Bulls, like McCall-Stillman.
Honored.
So, Matt, I'm going to let you do your own introduction. I'm really bad at introductions, and I'm going to let you do your own thing, but in this episode, everybody, we're talking about no data, no problem, and Matt's stories and everything are great. But Matt, go ahead and introduce yourself. Tell us about who you are and what you do.
I'm not gonna lie, Kenny. I kind of wanted to hear you give me your bad introduction.
You're I'll do it. Depressing. I don't want people to hit like scam.
Oh my God, I'd pay for that. So, all right, I'm my broker, Matt. I've been in real estate as a broker for about 12 years now. I'm also a mortgage broker. And about 4 years ago, we started getting into short-term rentals. I was a long-term rental investor prior to that. And now we've got a mixture of short, mid, and long. 31 are short, mid, and the other 20 are long. So 51 properties owned. I bought and sold hundreds at this point, including all my clients, a lot more. But all that being said, I've been teaching real estate for about a decade. I got 70 agents. And people started buying short-term rentals with us a few years ago. Knock on wood, we're batting 100, and we want to keep that percentage up as much as possible. And then we started doing design and co-hosting and management in the last couple of years. So we are the turnkey solution here in Michigan, and it's been a wild ride. And I learned a lot in the last couple of years, especially with all the changes. And that's pretty much me. And I'm a recent dad of 10 months.
That's awesome, man. That's awesome. I'm super happy for you. And one thing too, so Matt's the man. He's got a lot of really good experience. And but I want to sit on something like, Matt, do people actually vacation to Michigan? What's the deal with that? Yeah.
The dreaded question that for most people isn't really a question. It's rhetorical for you. Right. Who would actually do such a crazy thing? I know. Yeah, believe it or not, I don't know if you know about this place called Canada, but some people actually vacation in Canada. I would not, but like I guess we're the tip top of people that are a little bit further south, right? Yeah. So the truth is, like, Michigan folks move all the way around Michigan. It's really great. The summers are absolutely epic. There's really no other state I want to be in when it comes to our summers. I do, if it comes to snowboarding, skiing, sometimes we'll shoot up north to some of our mountains, but compared to going out west, it's not the same, but it's pretty cool if you want a quick local little trip. We have lakes galore, Great Lakes. A lot of states don't obviously have that. We have sand dunes, we have snowmobiling, we have fishing, ice fishing. We got a lot of cool things, pictured rocks up in the Upper Peninsula. And plus, like our state is cool. We can do this. It's a high five in the face. So, that's pretty cool. That's what we love about Michigan. That's what people come here to do. I've had a lot of Texas friends and investors, California, Colorado, they come here and they go, this is actually pretty great. I think people are always surprised when they actually get to Michigan and they go, it's pretty awesome overall. So
right. And that's so true. I've got grandparents who live in Michigan and in Midland, and and it was fun. We drove over from New York. We went through Canada down there to them and everything, and just across. And beautiful state, lots of stuff to do. Like you said, cool state parks, national parks too, right?
Oh yeah.
It's not just lakes. There's a lot of stuff to do. I saw a video the other day. It was, showing like the dunes, and they're like, no, it's not Utah. It's not Nevada. It's not like Arizona. It's Michigan.
Not Dubai. It's funny. I saw, I think might have been the same video, but I saw somebody doing, the snowboarding thing on the sand dunes.
Oh, yeah.
I've only seen that in Dubai. And for some dumb reason, I've never considered the fact that we could probably do that here.
Right.
And then when I realized it was Michigan, I was like, oh my God, I could do that. And so now that's like one of my things I want to go do. Like, it's amazing. You can have sand dunes, like beautiful forests, lakes, Great Lakes, all within a mile of each other. That's what gets really cool. And there's some special spots like that.
And and it's really awesome. But here's the thing. From what I see on social media, people are talking about Michigan as a vacation market, as short-term rentals. Every now and then you'll hear people, but like for the most part, it's not, It's not in the big popular Facebook groups. It's not like the number one market everyone's talking about. So what we end up doing, what the whole show is about, and what you and I were talking about beforehand, is no data, no problem. No data. Like, we don't end up with data. And Matt, I want to share an experience that we had together. This is more of the egg on my face. And I think we had the call. I want to say it was 2 years ago. It
had to have been the summer.
Yeah.
Actually, no. God, yeah, it had to be.
I think it was, because I remember talking to you in my my lake property and going like, "What the hell is this guy thinking?" Like, so anyway, for everyone listening, Matt and I we were having this conversation. And he sent me these properties. It was Cadillac, right? Cadillac, Michigan. Cadillac. And he's got this property in a lake market. And he's showing me this property. It's not on the lake. And he's like, "Kenny, what do you think this is going to do?" And I'm like, looking at it, I'm like, "Dude, this isn't going to do very well." You know, he's like telling me that. I was like, "What are you thinking?" Like, and he's like, "I got a good feeling about it. Trust me," like, blah, you know, like going on. And he's buying himself. So it's not, you know, for somebody else. And I'm just rolling my eyes and going like, "Yeah, right." So Matt,
do you remember the last question I asked you?
I don't. Go ahead.
And maybe I'm just making this up. I don't know. But I'm pretty sure I was like, "But look at it." What do you think?
I do remember that. Yeah, I do remember that. Yeah. But for me, and that's the thing, like for me at that time, and something I've learned is that, so at the time I was like, there's just no data. Like, there's nothing in this area. There's no way to support this. It doesn't matter what it looks like. I was like ignoring all the different elements of it and like not looking at kind of like the big picture. And I think part of that is like, you know, hesitancy in terms of like, well, is this something that could actually work here? Not knowing the market or the markets and looking at similar markets and everything nearby. And so that was a huge, like, I mean, that's something I've kind of learned over time now, even through my own experience investing in new markets and stuff. But Matt, tell us, like, how much did it make? How's it doing?
So, couple things that happened with that property. When we bought it that year, we launched it in Q1. We got it set up in Q4. We got it launched in Q1. And we were scared because why? That's seasonally, when you're up north near lakes, it's pretty much the worst quarter you have. So we're like, "Oh crap, this is scary." And it was tough because it was one of the biggest Airbnbs in the area. And there was no data for anything that size. Nor the amenity stack that we had. We had a saltwater pool. We added a hot tub. It has a pond. It's got the cool string lights. We added a hidden speakeasy, like movie theater room with a pool table. So it had some cool vibey things, but we go, "And here's the launch." Go, please, for the love of God, go. And I was like, "Damn it, Kenny was right." and you know, for you like anything, when you just launch, all you want to see is numbers flying. It's just not how it's always going to go. Right. And that's okay, especially if you're in, I think it was February, which is just a tough month. So we're like, all right, it's okay. Let's really lower our price point down, which is kind of one of my strategies. I always go, "Hey, get those first 10 reviews in, make sure they're all 5 stars so people know people are experiencing a good stay here." That's one of my big things. I always push for that. Like, I'd rather undersell the heck out of it so people come in there. What are they going to do? They're going to be even more happy because they got it for damn near free. They're like, "This is great. This is amazing. I love it." You know, it's marketing costs, right? So that's what we started doing. We got back into that habit real quick. That was our pivot. And throughout the year, it got better and better and better and better. And we ended up grossing $177,000 on our first not full year.
Wow.
Yeah.
Wow. I thought you were going to be like, "We grossed 100,000." So like, I felt like it was building up to that. I was going to be like, "Matt, that was anticlimactic, but 177. That's huge, man. That's huge." Yeah. So what was the purchase price again? Wasn't like
$495.
490. Okay, yeah. So yeah, I remember looking. I was like, "They're gonna do like 50,000." Like,
I would have eaten it.
I remember that. Like, I remember looking at that, and yes, Kenny is wrong sometimes. So
I didn't think for a half second we would do that poor. I thought our worst. I think if it was bad, it would do 100. That's what I thought.
Sure.
And for me, that I felt good about that.
But let's talk about that though, because
sure.
I mean, addressing it head on, like there was no data. Like everything in that area, it's a lake market. Everything is on the lake. And here you are buying something that's like in the town, you know? And I'm trying to recall some of this stuff. I mean, it's been a while, but I remember the property. But like it's in town and it's bigger and it's got like these nice amenities, but like there's nothing like it around. So how did you know? Like what gave you that intuition, that knowledge that to get confident enough to actually do this?
So I'm older than I appear, but when it comes to like my first couple STRs, I looked in the city and I said, okay, is there enough action? Is there enough density of population where I feel like maybe mom and pop come in for a weekend, or you're coming to visit mom and pop or whatever? Is there hotels and motels? Is there a nice place to even stay? I'm like, okay, there's no nice place to stay. There's enough density of population where people are going to need to stay there, even if it's for a one-off. I'm like, okay, so maybe we'll get some kind of traction there. Then I'm looking at like what other kind of things are there's decent hospitals, decent schools. What are my exit strategy plays? And as I keep kind of diving into that, I go, all right, generally I like that pretty much satisfies whether or not I even want to be in that area. It doesn't have to be amazing. I don't need a knockout town with all these traffic drivers for me to want to invest there. I just got to know a town seems self-sufficient. It seems like travelable, usable. Like if I had to live there or somebody else had to live there, it would be like, okay, decent enough town. I'm good with that. It's one of my baseline things. Cadillac is decent enough. That's not too far from Traverse. And I was like, you know what? I kind of dig that. And then on top of that, you're next to two big lakes. Even though we're blocks away from Lake Cadillac, you're still like on the same block headed to downtown Cadillac, where there's still, there's bars, there's restaurants, whatever. I was like, okay, it's a sleepier up and coming town, but it's still a nice little town. So I'm looking at all those things and I go, all right, there's enough things that tell me I like the town. I generally like the location. Of course, I wish it was on the lake, but this thing's got a saltwater pool. It's got a heated saltwater pool. And then I said, we can add a hot tub. So we did. It had a pond feature. I was like, maybe that'll be good. Maybe it won't. And then it had this weird bunker off the garage room. And that took some really creative thought to make that cool. But that turned into be one of the favorite rooms in the house now. It's the speakeasy hidden pool room and movie theater. So we saw that we gave these thoughts became real, right? They came to fruition. And we just said, I think if we have these amenities, we have this fun, we have this size, it's an attractive house. One glance of the exterior of the photo, and you go, that seems like a cool house I'd like to stay at. It calls to you, right? I saw those things. I said, I think it's going to do something. The next thing I checked, because data has finally started coming out, because back when I started, there wasn't data. STR Insights wasn't a thing. AirDNA wasn't a thing. Like, I didn't know what to check. I just had to go with, as long as it does better than long-term rent, I'm okay.
As long as it does better than that, yeah.
That's literally, and on this one, this was a new jump in terms of size and purchase price for us. This was a big push for what I was used to. I was used to buying like $100,000 to $300,000, and the 500 was a big jump for me. But now it feels very comfortable. That being said, I started looking at the data, and I was specifically using STR Insights because it made sense to me. I was like, okay, the way the searchability, everything just kind of made sense about STR Insights. That's why I liked it. So that's why I like it. And so as I was looking at it, I saw, okay, there's this property, there's that property. I'm like, there's all 2 and 3 bedroom properties. And I'm like, oh crap, there is this 1-4, but it's on the lake. Can I use that? So over time, I had to go and I had to reverse engineer things. I had to figure out what's the negative space of value. And after I kind of like broke it down, I was like, what do all these properties have in common? They all have bedrooms. They all do or do not have amenities. And once I found all the properties that do not have amenities, that are kind of plain and boring, I broke it down to a price per bedroom per night average. Once I did that, I was like, okay, this is my baseline. This is the most vanilla, boring thing. Now, I already know I can achieve this as a baseline result. Now I have this many bedrooms in this house. I multiply that out, and maybe I take a reduction of like 20% just to say, okay, it's one house. So maybe we won't hit that amount. Maybe you have a higher price per per bedroom on smaller homes. So I was like, let's just try it. Let's try and navigate these waters, right? Once I did that, I was like, you know what? I think we're going to pull 100. And now I haven't even added back my amenities. And at the time, I was going by a rule of thumb that was kind of trending, 10K added for a hot tub is like
Right.
what a lot of people were saying. I was like, you know what? That's fair. That's probably going to drive interest, especially in the winter. So I got to get that. The pool, some data was starting to come out, and the pools seemed to all hold like $100,000 to $200,000 of value. So I was like, you know what? This has to be worth at least like 10 to 20 grand. And
Right.
it sounds arbitrary, but to me, that's what I was experiencing from what I could find. And I said, I would definitely pay a premium. And when I broke it down to just a 1 bed, 1 bath, and what I would pay as a premium, and I figured out what that percentage difference was, I multiplied that out by the size of the property, took a reduction of like 20 to 30%. And just so I had a little bit of buffer, like, okay, if this is my normalized value now, it should do 100, maybe 150. And at 150, it starts to make some sense. So I was like, let's try it. We ran it. We exceeded it. We're hoping to break 200 this year.
That's
so
awesome.
I've been starting to apply a lot of that logic. There's a few other things I do that are hard to if people even follow that, that's amazing. Good job. You're very smart. And maybe you can follow crazy math that doesn't really make sense either. But I've applied that to other properties, and it seems to be working with a couple other factors that we have introduced.
Yeah, that's awesome to hear. That's a different way. And I talked about on the first episode, my way of doing it now is I like to do a percentage difference. So I'll look in similar markets or markets in the region and look at, if it's a higher bedroom count or lower bedroom count, because we're starting to get enough data now where even these higher bedroom counts, you can still find some. And so I'll look at like, okay, properties with a pool, properties without, and take the percentage difference and then apply it to if it's more or less, with bedroom count. And it gets it pretty close. And so, but I like your way too. I love there's different ways to do it. And people should do it multiple ways just to verify. But lots to unpack here, man, because that's awesome story. And it's crazy because like even myself, like in New York, Western New York on the lakes, like the property I bought, adding a hot tub in the wintertime made $20,000 more this year by adding a hot tub. You know what I mean? Like no one has a hot tub. So there's no data to like pull it, which is crazy. But I know from experience, and I know who's going there and like when and all this stuff, like that's a wintertime amenity that's really going to drive revenue. And so for somebody who's new though, like inexperienced with STRs, what do you tell them? How do you should they even do this? Should they even kind of take on this risk? Because it's riskier for them, right? So what should they do?
That's a great question. I think I kind of want to say something that needs to be said. I think the professionals, the real estate agents and brokers, the coaches, the data experts, we need to be a lot more transparent and coach on making sure we're looking out for those people, because there are folks out there that they're getting it. I was kind of giving this analogy recently to you, actually. You can't, some people go, hey, Matt, hey, Kenny, I want the best of the best. Put me in the best market with the best chance of success and the highest earnings. And like, okay, man, here's your F1 race car. Here's the Nürburgring. You got to win. You got to place or you die. And we never raced before. And like, go get them, buddy. Like, bad idea. Bad idea. And I think that's the problem. We're not talking to people about what they as people can handle, especially on their first run on a track with professional drivers. Like I think when you throw somebody Kissimmee or Scottsdale, Nashville, like you are playing with some of the top dogs out there. And if you're not coming in strong, you're gonna get eaten up. So to the newer folks, I think it's about really assessing what their needs and tolerances and saying, okay, here's a range I think that is good for you. And here's what I think you need to understand in terms of this market or that market. And I've been very upfront. Like I get people to call me, and frankly, I probably really bug them because they'll say, I heard Michigan's good. I want to buy here or there. I'm like, that's great. I'm happy to, but are you okay with no data? Absolutely not. I'm like, see you later. Because I don't want to waste their time or mine anymore, because I've shown people where we actually have decent data and they still don't buy. And I know you know that feeling too, right? our job as professionals, especially with new folks, is to make sure their first deal does not burn them. Because there's so many folks that go, hey, I got a 1031 exchange. So I just bought this and I'm losing. I got to place it somewhere. I'm like, okay, how do you feel about the data? Or like, it's become such a big, tough talk. But don't forget, when AirDNA, everybody goes, oh man, if I could go back in time, I'd buy all these properties for a fraction of the price, and I do all this. And those were the people that were the true like gold hunters of our era, right? The people that were willing to buy in markets that were still up and coming. And frankly, the Midwest, parts of New York are probably still in that gold rush era. And you have to be willing to like accept some risk to do that. But you also need to understand another concept, the ceiling, the income ceiling, right? We already know in Kissimmee, like it's going to be hard to break 600,000 no matter what you try. Like no matter what I've done all my amenities. I can't get past here. Michigan, we don't know. And I'd rather work in an area where we don't know, and I can just throw amenity after amenity if I keep getting more money, and I can just make this property something that just creates draw. And we created multiple properties. One of my friends, she bought one in Sarah Glidewell from the Carwells. She bought one in a little sleepy town where, all you do in that town is bury bodies. There's nothing to do. That's it. There's 1,000 people. You drive through it and you're like, what did I just drive through? Nothing. Boom. It was a body. Like, that's it. Look, there happens to be a lake, and the property she created was beautiful, and it's a nice town. But it's just sleepy. It's quiet. And what we're seeing is the people that really drive with like interest and value, that's what's really creating the dollars we all actually want to see. If you go and you target something that's got tons of data and you're fighting tooth and nail, like, and you got to get the revenue manager and you got to get this and all of that, like, you're going to have an uncomfortable, a CTJ of come to Jesus, if you don't know what that is, but where you go, oh my God, what just happened? And I don't like seeing people go through that. And I'd rather be in a market where you also have an exit strategy that's not going to hurt you. You need to exit quickly within 6 months to a year. You're probably going to be a break even or a minor loss. So that's what I think. Let's minimize the burn rate of our new folks.
Yeah, I love that. And I think too, a lot of people need to really understand, like, especially when buying a short-term rental, that it is an active business. This is not passive income. I see too many people, buying, these turnkey properties and in these big popular markets, expecting them to cash flow and make good money. And it's like, they're selling them at a premium. Like, you're buying, and then you don't have a plan to improve upon them. Like I'm realizing 100%. Like when you buy, it's just like a normal business. Like when you buy a normal business that you bought from like an old person, you're going to improve upon it. I was talking to this guy, this random side story here, this guy in Arizona and in Phoenix, and he bought, I don't know what the river is there that people go like tubing on, but he bought this tubing company, and he looked at it, and it was like they had the old yellow buses, and every day in the summertime at 11 a.m. they had to shut down the like, they wouldn't allow anybody else. They had too many people, too many tubes. Like that was it. They were at capacity. And he's like, if I could buy this business and extend it from 11 to maybe like 2 or 3, in the day where people can keep coming, like I can make triple the income. And they had nothing automated. They had no systems. They had nothing electronic. He just came in and implemented these new systems, and he quadrupled the revenue of that.
Oh, amazing.
That company. Yeah. And the EBITDA, I mean, he's making 50% profit off of that tubing company. It's insane. Like the numbers, sure. Okay. Tubing company. That's not real estate. It is kind of real estate. He owns real estate and a business with it that's driving income. But the thing though, the lesson I learned is he's buying something that's quote unquote turnkey, but he knows what to improve upon it to increase the revenue. And when we buy turnkey businesses, sure, they can, they're already generating revenue, and that's advantageous. But if there's nothing you can do to increase the revenue, you're buying it at a premium, and you're really not going to make that much money from it. It's actually not a prudent investment. And so I see a lot of people like fall into this, like, well, I want something already ready to go, and you're not going to find that in a lot of places in Michigan. You won't, and there's not going to be any data and all this other stuff. And it scares people away, and that's okay. But for people who are looking for the real returns, that's where they're at. Like you were saying, that's really where they're at.
And let me add on that a little bit, because
Go ahead.
there's even like, when it comes to amenity ads and things like that, people go, well, where's the data? Where's the data? Like, how do we know it'll get me the proof? The fact that nothing exists is the proof. That's actually the truth. The negative space of something not existing that will actually be attractive. If it's already, you can already see that there are properties in an area that are getting traction that don't have any of that. You don't necessarily need to prove that this amenity ad will add X dollars. You just need to know that it will. You have to make sure that your bottom line is being met, but anything above that is just an exceptional thing, kind of like your guy just did. He's like, this will be okay, but I'm coming in to improve it. Therefore, I increase my income that much more by doing so. By doing the things that people don't normally do, you will typically get a really positive result. And one other thing, longevity. No one is talking about, when you invest in STR, don't be worried about the first 1 or 2 years. You need to plan to have that for 10. And I think that's a really dangerous thing. Like when you're buying, especially in an expensive market that's already been established, look at the trend of income. If the income is going down, is it for the average daily rate or occupancy for all of the properties, because the influx and surplus of potential Airbnbs and the quality of Airbnbs continues to rise, you're buying in a dying market. Stop buying there. So anyway, I could go,
Yeah. Well, that's the interesting thing too, because not to, once again, egg on my face data provider here, but, when you're looking at, when a lot of people are looking at the data, they're looking at historical data, right?
Yep.
And I mean, and you go, oh, well, what about the future? And it's like, we don't know what the future holds either. So we don't know what the future holds, and we can't necessarily trust the past, like how actual, I mean, that's a very deep conversation and rabbit hole we could go down. But how in reality, like how reliable can that truly be? Especially when you're talking about longevity. Because a lot of people, when they buy short-term rentals, sure, they might on average own them for like 5 years. But the reality though is like a lot of people aren't thinking like they're thinking, I'm going to own this for a while. Is there really a runway for that revenue for a while? Because you're right. In the first year, we want to ramp up, and the next year we want to top it. But I see a lot of people, year 1, they do okay. Year 2, they do worse. Year 3, it keeps going downhill, and they're like, oh, panicking. And it's what happened? Because they're not thinking like that. They're not thinking like year 2, year 3, and how am I going to improve? How am I going to stay a step ahead of the competition? I call that the moat, the thing that separates you from everybody else. But the problem is, like you said, going into these heavy, dense STR markets and assuming that you could just pick up where everybody else is. It's a business, guys. You have to innovate. I have a tech company, or data tech. We have to innovate. Yeah. I mean, it's crazy what our competitors, where they've come, what they learn. They watch every single thing that we do. And I see crap. Like every time we add a feature, I'm like, I'm going to see this in another software in 6 months. Like we have to be thinking about the next thing and the next thing after that. And when you said, Matt, I love that. The Formula One, the F1 racing, like that's what those people are doing. They're looking ahead, and you're playing checkers and they're playing chess. Yep. Like if you're going to live in the fast lane, like you need to be playing chess. Like it's a different level. And so, Matt, like what would you, how do people get to that level though? What do you advise that they do?
Get to the level of playing chess, you're saying?
Sure. Like, you know what I mean? Like getting to that kind of performance and that experience and knowledge and knowing what to do and in these, in these markets where there's not a lot of data.
I apologize for the borderline pitch here, but I think align with the coach that has your interest in like at the top of their mind, but also like can teach you real stuff. I think a lot of the industry has put so much emphasis on, like this is not you per se, but I'm talking about like technology.
That's fine.
Go ahead. I was going to say tech. I was going to say the Turno, like Turno is great. Like there's a lot of things like the PMS is great. All that's great. But the truth is, here's a great example. I have a friend that bought one in Lexington over here. I can do this. And he doesn't have anything but Airbnb as his tech stack, right? And within that, he's just got an incredibly hospitable approach. He calls every single guest that checks in, goes, hey, This is Corey. I want you to have an amazing time. If you need anything, this is my direct cell phone. No matter what time it is, call me, text me. I want you to have a 5-star stay, and I hope you and your family have a blessed, whatever weekend. It's so cordial. It's so hospitable that when we're all harping on, you got to have tech, you got to have this, you got to have that, you have to have a revenue manager, we're forgetting to just be great managers of our business, to be cordial and hospitable. And in addition to that, he has done a nice job with just make sure it's a comfortable, nice stay. It's clean. Those are the baselines of it. Like, I'll never go back to any place that's not clean and like friendly. If that's not happening, you're not going to go back. You'll never go back. If there's additional amenities and fun, you'll probably do that. But you know what? I'm sorry. I think I just got a little off track. Welcome to my brain. But that was all. What were we talking about before that?
Well, so I see where you went down the rabbit hole, but basically I'll summarize it. So I think what you basically said is like working with people who are experienced and know what they're doing, and then understanding like it's not just about how can I automate this business, like that's an important element. I mean, I looked an interesting data point I found out recently, and I posted this, and it caused a stir, but 75% of the top properties, okay, so like the top 7 properties on each market, in each market, or like the top, I guess, like if you take the top 10%, 75% of those properties are run by property management or co-hosts, meaning not the Vicasas and the Evolve property management, but people who know what they're doing, and they have more than one property in that market. Maybe they're managing multiple properties in that market, but like it's not, no longer are we seeing these like owner hosts running the show and having the properties. They've taken over their markets from previous years. Previous years, it was all the top properties were all ran by owner hosts. You didn't see property management companies up there. You didn't see coho. It was all just property. Now it's people who've mastered the craft. They own properties probably in that market, but they're managing it for other people. They have a brand. They have a niche. It's like it's unique and it's quality, and they're performing the best. You're competing against that when you go into these big, large markets, and even some of the small ones now too, for that matter. But that's where the game has shifted. And if you're focused on simply automation, how can I make this as passive as possible and everything? That's not how you're going to maximize your returns.
Absolutely. And that even brings up the whole topic of like understanding what's happening in your business, and that the experience you get from like multiple years of management. Like that's where like you really start to understand, oh man, even at the setup, people don't emphasize the reserves. They don't emphasize like that seasonality. If you launch in a rough season and you don't have reserves to maintain your mortgage payment and your utilities, what actually happens, it's not just that you worry about losing. You start to change your whole marketing approach because you start panicking. And when you start panicking, you change like the execution and the plan. And at that point, you've pretty much ruined your whole business model. That happened to us on one property. We started panicking, like, oh crap. We started doing something we don't normally do, and it hurt us. Luckily, we recovered and we got it back on track. And now we're on track. We're good. But we've seen it in our own business. We've seen it with other people's businesses. And I say to people, learn to stay the course, even when it's freaking painful. Because sometimes all that tried and true experience, it really does pan out. But in that moment, those moments feel like years when it's a bad moment, right?
You're like, dang it, Kenny was right.
Kenny is right.
It's never right. Stay to your true to your gut. No, I'm just kidding. So, cool, man. What else? What else do you have about no data, no problem? What do you
I think the only other thing, I think we've kind of hit on it in some ways, but again, going back to when you are in emerging markets, I would say you really need to. There's a guy, I was just talking to him the other day, and we were talking about partnering, but Jonathan Lamb, I'm not sure how you say his last name, but he just launched one in Tulsa, and when he showed it to me, I immediately thought this house must be $1 million house. The thing is gorgeous. The design is like 10 out of 10. The amenities are amazing. Hot tub, pool, like cool, like the chairs that sit on the top shelf of the pool, so it's like you're kind of in but not. Ping pong table, pool table, basketball, amazing lit up signs, wallpaper, tastefully done everywhere, cool furniture, karaoke mic corner in the living room. I mean, it's just cool. And I said to him, I was like, what'd you spend? Like, I won't say all of this on here, but like, anyway, the numbers weren't there to support the purchase price that he did. And I said, why'd you do it? Not because I thought he was wrong, but I want to know why he did it. And he's like, the more I do this, I've done a handful of Airbnbs, and I always do. He's got a 4.99 on all, like across all of his units. And I was like, that's kind of hard to do. We have a 4.92 across like a lot of units, and we're very proud of that. But 4.99 is amazing if you've been doing this for 3 years with a bunch of units. So I was like, I saw this, and he said that the thing is, after I've done property after property, I've just realized I love this business and I want to provide just an epic stay for people. And so far, historically, I've been proving my own data. And in doing that, I've come to trust my decisions. And that's a data source. It's really hard to quantify, right? And that's kind of where I'm at in my business. I'm like, you know what? I can trust this. I've been doing this. If I do a little bit more, it's probably going to work out. And this guy, he full sent it. Just sent it. This place is gorgeous. And I don't even need to look. If I go to Tulsa, there's one place I'm staying at his house because it's gorgeous. Why wouldn't I? I think that's, if you can create a property that's so fantastic where people are favoriting and hearting it and saving it for their next travel plan, that's how you hit it right. And the truth is, you don't need a 7-bed, 5-bath house to do that. You can still have a 2 to 4 bedroom house in a nice little town, and you can have it so stacked with amenities and attraction that it will pull in exactly what it needs to. But I think people are afraid to go that deep on their property, and that's part of the issue. And it's hard to teach that without being with experienced people that have experienced it.
Right. That's a really good point. And I think that goes back to, once again, going back to the beginning where we talked about newbies, getting into business, rookies. It's like, don't just jump all in, like do all these things in this one, because the reality is get your feet wet, build up your own experience, and then take those leaps. But here's the thing. If you expect those type of returns, then you're going to have to do those type of things. You know what I mean? Like that's just normal, but it's okay getting in and having a decent return. That's sure. Like get a win, a 15, 20% cash on cash return. Great. Like that's great. That's awesome. But if you want that 30% or higher, you're going to have to do next level stuff. And that has to be the expectation. Nothing turnkey, nothing these big popular markets everyone's talking about. That's not realistic. So Matt, I appreciate you being on here, man. Love the conversation we had here. Lots of great takeaways. Last thing, close us out here. Tell us, I got 2 things, but one, like the best piece of advice you want to give any investors, how they can cash flow better.
Great question. How they can cash flow better.
Yeah. We're all about cash flow positive here.
I think in 10 years of investing now with real estate, I'd say continue to maintain and improve your properties over time, because sometimes that's actually the cheaper, most economical way to improve your cash flow than buying a new property, especially at the newer price points. Now, if you don't have something, you're not in the position to improve. You have to still buy so you can create something to improve, right? To improve your earnings. And just like you kind of hit on, people get caught up in like trying to keep up with the Joneses with the STR shiny object syndrome of, I got to have one. I want to have one like this my coach has, or like this other cool
property.
Yeah. And the truth is you can still buy a decent property, I think, in the 200 to 300 range, a lot easier in the 4 to 5. But within that, sometimes what I've learned from coaching is there's 2 types of like students that we've had. The ones that just want to figure out if they really even want to be in STRs, and the ones that want to full send it. And usually once they figure out if they even want to do it, it's because they were able to buy something that did produce a positive result. And they go, okay, now I want to go deeper. I either want to add amenities now or buy a second property that really makes sense because I feel like I've come to understand the business. But the ones that full sent, I had two of my students bought properties on lakes with pools this year. And they had the mentality, send it. They were like, I'm going to do this come every possibility, any possible way I can improve these properties, I'm doing. Golf sims, game rooms, pontoon boats, kayaks. They're doing it. And I'm like, guess what? When I'm in that area, that's probably where I'm on vacation. I look forward to like vacationing at my students' houses. Hey,
Yeah.
help them. Plus, it's cool. I get to give them more feedback so they can continue to improve it. So I know I have a lot of tangents. Apologies, but hopefully that answers things.
I think it's really good.
Cool.
I think what I took away with that is, and I've seen it too. Look at improving your own. If you're listening, you already have a short-term rental. Improve it. Look at ways you can improve it, because there could be a better ROI there. And then if you're looking to buy your first one, like, you can find opportunities out there and put in those amenities and those things. And so anyway, thank you so much, Matt. Matt, before we go, if people want to get in touch with you, how can they get in touch with you?
Best way, I don't know why I can't talk right now. Best way is on Instagram. I have a link in bio if you want to sign up for my email. On that, you can get access to my top picks for properties that send out.
Is it My Broker Matt? My
Broker Matt on Instagram. Yep. And I have a few other things. I got a free mini course if you want to learn kind of how I teach. We have our mastermind. You have access to all of that. So, and I've been lucky enough to work with Kenny for a while. So it's been fun talking shop with you. And I appreciate you having me on over a year and a half, maybe 2 years, actually. Because I think we had our talk before Cadillac was bought, right?
Oh, like with STR Insights?
Yeah.
Oh man, I think it was after. I think it was after.
It was after. Okay. Well,
yeah, it was after we were launched publicly. But anyway, cool. Yeah.
Appreciate it, man. Yeah.
No, I love the conversations. But anyway, man, thank you so much for being on. Thanks everybody for listening. I hope you enjoyed today's episode with no data, no problem. And I'll see you on the next episode.
Bye, all.